This video is on a question that has been asked by a student relating to a point concerning the scope of total income, and I believe it's an important point because I have seen questions coming in the exams on this particular point, and it's important to answer this so that all of you are clear on this particular aspect. The question asked is, sir, if I have a business income or income for profession and the business income or income from profession accrues or arises outside India, that means it is a foreign income, but the business is controlled in India or the profession is set up in India, okay, so there is a nexus with India. In such case, will such income be taxable in the hands of a resident? Secondly, will such income be taxable in the hands of a non-resident? And what if the resident is a resident and ordinarily resident, which is ROR, or resident but not ordinarily resident, which is RNOR? Will there be a difference in the taxation or will it remain the same for both? So let me answer this question. So if you see this chart, total income, and what is the total income that is taxable in the hands of a person? It can be either Indian income or it can be foreign income. Now, Indian income means an income which has a direct nexus with India, and this would be on the receipt basis or on accrual basis, which means either the income is received in India or it is deemed to be received in India, or it accrues or arises in India, or it is deemed to accrue or arise in India. Okay, that means if the income is received in India, the income is taxable in India on receipt basis. Similar is the position, even though it is not actually received in India, but it is deemed that it is received in India, and so therefore it gets the same treatment as received in India. Similarly, the income accrues or arises in India, or it accrues or arises outside India, but it is actually deemed that it is accruing or arising in India, and therefore it also gets the same treatment as accruing or arising in India. And therefore, whether it is a receipt basis or an accrual basis, and both need not be satisfied, even if one is satisfied. That means if income is receipt outside India but it accrues in India, then also it becomes Indian income. Similarly, if it is accrued in India but it is received outside India, then also it becomes Indian income. So if it is Indian income, that means there is a sufficient nexus with India, and therefore irrespective of the residential status, okay, the income is taxable in India, whether the person is ROR or RNOR or NR. So this is with regard to Indian income. So you need to check whether there is a receipt nexus or whether there is an accrual nexus. It could be actual or it could be deemed. In both the cases, if it is so, then it becomes Indian income. Then you really need not look at the residential status, and simply you need to include it in the total income of that SSE, because there is full nexus or a direct nexus with India. Now, income which is not Indian income, we call it as foreign income. That means none of this is satisfied. Okay, that means neither it is received in India, neither it is deemed so, neither it accrues or arises in India, and neither it is deemed so. So receipt is outside India and accrual is also outside India. In such case, the income becomes a foreign income. Now the question in the case of a foreign income, which has been asked to me is, sir, if the income accrues or arises outside India, it is a foreign income. What happens in such case if the business is controlled in India or if the profession is set up in India? Then if it is a case of a ROR, then you really need not look at the place of accrual or the place of receipt, because we know that in case of ROR, global income is to be taxed. So whether it is Indian income or whether it is foreign income, you need not worry about that. If it is a case of ROR, you need to include the global income in the hands of the ROR. In the hands of an NR, that means a non-resident, you need to include only the Indian income. Okay, foreign income is excluded. That means if the income is accruing or arising outside India, even if the business is controlled in India and the profession is set up in India, you cannot say that there is a nexus, though it is not a full nexus, but it is a part nexus, because it is accruing or arising outside India and the control or the setup is in India. So there is a nexus in India, one cannot say that there is no nexus in India. So merely because there is a part nexus in India, you cannot include this income in the hands of the non-resident. Why? Because it is not Indian income, it is a foreign income, and therefore all foreign incomes are excluded from the purview of total income of a non-resident. But in the case of a person who is a RNOR, there is an exception which is made. Okay, Indian income we are clear. In the case of RNOR, it is included because Indian income is taxed in the hands of a person irrespective of the residential status. But if the income accrues or arises outside India and it is derived from a business controlled in India or a profession set up in India, that means one cannot say that there is no nexus at all with India. There is a part nexus with India, and because of this part nexus in India, this income is to be taxed in the hands of RNOR. It is not to be taxed in the hands of non-resident. It is to be taxed in the hands of RNOR because of the part nexus, and it is obviously to be taxed in the hands of ROR because the global income is taxed in the hands of ROR. So this basically means if you find that in a particular case income is accruing or arising outside India and the business is controlled in India or the profession is set up in India, then you need to include that income in the hands of a resident, whether it be ROR or RNOR. But if in this particular case the business is also controlled outside India or the profession is also set up outside India and the income is accruing or arising outside India, that means there is no nexus whatsoever with India. Then in that case, the income is to be taxed in the hands of ROR, but it need not be included in the hands of a RNOR or a non-resident. In the case of ROR, global income is to be taxed. Fine. In the case of NR, that means non-resident, only Indian income is to be taxed, not foreign income. And in the case of RNOR, and mind you, RNOR is possible only in the case of individual or HUF, not in the case of other kinds of SSC. So in the case of an RNOR, Indian income is obviously to be taxed, plus income from business which is controlled in India or a profession which is set up in India, even though it accrues or arises outside India, is to be taxed in the hands of RNOR. Indian income is taxable in all the cases. So let's quickly take a look at some quick examples to understand this better. Let's take a look at this example. So income is received in UK. So receipt is in UK from a business carried on in UK. So accrual is in UK and the business is controlled in India. So the control is in India. First column is for ROR, second is for RNOR, and the third is for NR. So we can just remember this as we go down because we won't be able to see the header after some time. Okay. So in this case, income received, so receipt is in UK, accrual is in UK, and control is in India. ROR, global income, is taxable. RNOR also it is taxable because though receipt and accrual is outside India, but control is in India. So RNOR it is taxable, but non-resident it is not taxable because both the receipt and accrual is outside India. Second example, income is received in UK. So receipt is in UK and it is from a business carried on in UK, controlled in UK. So accrual is also in UK and control is also in UK. So there is no nexus whatsoever with India. So everything is outside India. But ROR, global income, is taxable. And since it's a pure foreign income, it's not taxable in the hands of RNOR or NR. Next example, income is received in UK. So receipt is UK from a profession carried on in UK. So accrual is UK, but the profession is set up in India. So setup is in India. ROR, global income, is taxable. And since the setup is in India, then even though receipt and accrual is outside India, it is taxable in the hands of RNOR. But since receipt and accrual is outside India, setup really doesn't matter in the case of NR, and therefore income is not taxable in the hands of NR. Next example, income is received in UK. So receipt is UK from a business carried on in India. and therefore accrual is in India, and control is from UK, therefore control is in UK. Since accrual is in India, and we saw that if receipt or accrual is in India, the income straight away becomes an Indian income. So it becomes Indian income, and consequently it is taxable in all the cases. In the next case, income is received in India from a business carried on in UK and controlled in UK. So accrual and control is in UK, but since receipt is in India, the income straight away becomes an Indian income, and consequently it is taxable in all the cases. Last example, income is received in UK. So receipt is in UK, profession is carried on in India, so accrual is in India, and setup is in India, so setup is also in India. So receipt is in UK, but accrual being in India, it means that it's an Indian income, and therefore it is taxable in the hands of the SSC irrespective of the residential status. Let's do a quick recap before we close this video. Whenever there is a question regarding scope of total income, you need to figure out what is the amount of Indian income. Indian income is any income which is either received in India or accrues or arises in India, whether on actual basis or on deemed basis. And an income which is not Indian income is foreign income. Indian income is taxable irrespective of the residential status, and you need not worry whether the person is a resident or a non-resident. In the case of foreign income, that means income which is not Indian income, it is taxable in the hands of ROR, because global income is taxable in the hands of ROR. In the case of non-resident, only Indian income is taxable. Foreign income is not taxable. There is a special consideration in the case of RNOR. Indian income is obviously taxable, but in the case of foreign income, if the income accrues or arises outside India, that means though it is foreign income, it is still taxable in the hands of RNOR, provided the business is controlled in India or the profession is set up in India. In all other cases, if it is foreign income, it is not included in the total income of RNOR. That means if the income accrues or arises outside India and the business is also controlled outside India or the profession is set up outside India, then it falls as a pure foreign income, and it is not included in the hands of RNOR. Hope this is clear to you. Do subscribe to this channel if you don't want to miss such useful videos which I keep rolling out on a regular basis, and do like and share this video with all your friends and groups if you find it useful. Thank you and all the best to you.